Your message here is essentially be careful. There's a bunch of tech companies that have gone public over the last few years in a much different interest rate environment, and you think a lot of them just can't hack it.
I mean, that's the reality. The reality is over the past several years, we had really a sort of nihilistic valuation environment. We have a nihilistic Fed that, feels asset prices don't matter. They felt asset prices didn't matter on the way up. That led to an insane tech bubble. All of these tech companies got crazily overvalued. So many crap companies went out in 2020, 2021. I've had this line, nihilistic valuations, I've been using for years. Now we're on the other side of that. And most of these companies that went public over the past several years are never even going to be worth their initial offering price. And so there are a few narrow areas where investors can look. But in general, we are dealing with a nihilistic Fed that's greening out of control, is my view.
But valuations have come down so much, Geoff, in a lot of cases for these IPOs that they've gone below their IPO prices. Where do valuations settle out and start to look attractive? And isn't what you're describing essentially the tech playbook? I mean, you take copious amounts of VC money, get market share, and then eventually turn profitable. Are you saying that because the Fed is changing and interest rate environment is changing, they're never going to be able to get there?
Well, only a handful of these high-margin software companies actually become profitable in the private markets. And then the hope is eventually they become profitable in the public markets. Now, what we've seen historically, Deidre, is in the public markets, the companies that become the most profitable over time all tend to be mega platforms. So if you think about names like Apple, which you were just speaking about, Microsoft, Alphabet, Meta, Tencent, if we look to Asia, all of these are what I would term mega platforms. They are a platform that offers multiple products. These tend to be the most profitable companies. And so I think the place to be looking, frankly, is what is the next generation of mega platforms? What is the next generation of Apple, Microsoft, Alphabet, Meta? These are sort of the areas we can find opportunity. But in general, I do think a lot of the companies that went out in 2020, 2021 will never get above their IPO price. They are mega platforms.
Geoff, hunting for the mega platforms is one thing, but particularly when it comes to enterprise, traditionally, the mega platforms grow into mega platforms by buying the absolute best point solutions that are strategically important to build out that platform. Oracle did that in a cycle. Google did it. Amazon has certainly done it. So isn't there the potential for investors to pinpoint some of these smaller companies that, yeah, they might not be profitable, but if they have the right IP and if they have loyal customer bases, even if they don't, go the distance on their own, they might get snapped up?
Absolutely. I think there's going to be a wave of consolidation of these point solution companies. Certainly businesses like Datadog, which has the potential to be a true mega platform for observability in the cloud. I'd expect them to be acquisitive, given they're one of these few sort of, mid-cap public tech companies that has the prospect of being a mega platform and actually is profitable. Salesforce might get more acquisitive. I think we'll see this across the board. Snowflake, still somewhat skeptical on that one, but they might get pretty acquisitive given they have a lot of emerging competitors in the private markets that may displace them. But I would anticipate actually that a lot of the M&A activity will come from some of these public names buying private companies. And so I'm not sure that the public is going to be able to benefit that much. Like I'm not hyper long SaaS point solutions in the public markets. I don't know the public's going to be able to capture the majority of the value from consolidation.
Interesting. Okay, so what do you do with fintech? You're not big on fintech lending companies. Wondering how you feel about crypto, given all of the drama there. And then there's SMB fintech. There's other types of fintech that we don't tend to talk about as much, but that seem a bit more stable.
Yeah, absolutely. Look, I think anything that's fintech core infrastructure, I'm very bullish on. There's an argument, there's some names in the private markets like Plaid, like Stripe, that are that. Block has the potential to be sort of core fintech infrastructure, although the fact they changed their name to Block during the crypto run-up from Square makes me inherently skeptical of that one. I think maybe they had a few missteps in 2021. It's certainly around buy now, pay later, which I'm very skeptical of sectorally at this point. The crypto pivot. So don't love they changed their name to Block. But beyond that, yeah, I am sort of generally bullish fintech where you don't have a lot of lending exposure. And then I think a lot of the energy around fintech in practice was simply driven by a fallacy around zero interest rates forever. And a lot of, I'm stealing a line from Jim Chanos here, the famous short seller, but a lot of these fintech companies aren't actually tech companies at all. They were just ARBs on low interest rates. I think a lot of them are going to go to zero, unfortunately.
Right. They're supposed to be cross-selling and growing into bigger platforms, but it's hard when there's so many of them. Geoff, you're also giving investors a warning here. You're saying be careful of a narrative mirage rally in Q4. It's kind of what we saw in the summer, right? A lot of these unprofitable tech names ran up once again. They have held up a little bit better. So what do you think? They get sort of a boost in the coming quarters, perhaps, but that can't last?
I mean, look, if you want to arb Elon and Twitter, you can probably make some money doing that. It doesn't seem very sustainable in terms of a thing to be doing. I think there's probably going to be broadly, depends what the Fed comes out with in the coming weeks. Increasingly looks like there's going to be another, significant rate hike. So there may not be this crazy narrative mirage rally. But yeah, in general, I think one should be, I don't think we're near the bottom here, and one should be very short. A lot of these names. And then the question is, what are the mega platforms? And of those, I am most bullish Microsoft. I think that they have a exposure to AI, which I think is going to be critical for the future, that's not priced in today through their investment in OpenAI, on the way in which they're leveraging OpenAI's GPT-3 capabilities and things like the GitHub Copilot product. I'm pretty bullish. Some of these mid-cap companies like Datadog that are profitable, that have the potential to become a mega platform. And beyond that, I'd stay away. I think the meme stock era is basically over. Twitter's the last one that's left, maybe.
It's not the first time we've heard enthusiasm for Datadog, too, as sort of that larger platform. Geoff, thanks so much for being with us. Geoff Lewis.
My pleasure.